Hello guys. In this video I will try just to speak about the first year of trading. Now what you should do and what you should not do. Okay, your goal in the first year of trading, since you are new, is not to lose your account capital. It means, let's say you open an account with $2,000, $1,000, $5,000, $10,000, whatever money you have, and you begin trading. Okay, you are beginner, you are just begin to lose. You lose here, you win here, you lose there, you win here. So try to check your account. Okay, let's say daily or weekly or monthly. The most important thing is not to make money the first year. The first goal that you have the first year is to learn and not to lose that much. This is my advice. Some people think that they can just, the first year, they just go and they watch a video or two, or they read a book or two, and they begin making 20%, 30%, 100%, I don't know. This is not gonna happen. Okay? So, why? Because you will do mistakes. And these mistakes that you do, some mistakes, they can take all your account money. Okay? The mistakes, there are a lot of mistakes. First mistake, you go and you do risky trades. You have little account, small account, and you want this 1,000 becomes 10,000 in 1 year. Okay? It's too much. That's why you shouldn't gamble. You shouldn't go to penny stocks and begin to gamble and you begin to search for a strategy that helps you. There is no strategy that helps from $1 from 1,000 gets to 10,000 in 1 year. There is no exception when it is a luck. Luck, it means you buy a stock, you have 1,000, you buy a stock, you close your account, you come after 1 year or 6 months or 5, and then you see, okay, maybe it goes up, maybe it goes down. This is gambling. This is not trading. This is not business. You can't open a store, you leave the doors open, there is no one in the store, and you let the customers go and shop. Okay? There is no security guy, there is no cashier, there is no manager, there is nothing. Just you let it open, and people, they go there and for free they take all your merchandise and they go out. This is what happened is when you leave your trade without management, without stop loss, without changing the stop loss, without looking what is the best products that you sell. This is business, and people, they still think that trading is gambling. That's why they will not succeed. If you think that trading is gambling, you will never succeed, because you are doing gambling. Now when you change your mindset, that's why you should change. You should change the way you look at the market. The market, we have buyers and sellers and short sellers. There are three. Some people, they buy, they think the stock is going up. Others, they sell. Either they lose money or they make profit. For example, I buy a stock at $10, it goes to $20. Okay, I make too much money, so I say, okay, it's enough, I go out, I exit, because the stock will begin to go down. I exit and I take my profit. Excuse me. This is selling. So we say buying, we say selling, and there are some people who are short sellers. They sell the shares of others. And these are, most of the time, all these are professional. They are not. It's rare to find a beginner who doing short selling, because it's too risky. Okay? Now, you should decide what you are doing. Now, the first year, if you are good, if you can make 1% each month, it's good. For example, if you have 1,000, next year you have $1,100, it's good. You are excellent. Don't expect more for the first year. Why? Because you are doing good. If you continue like this and you see your mistakes, next year you will have maybe 500, 700 more. Maybe you have saved a lot of money from your work and you want to put in your account because you are doing good and you can progress. Okay? But the big money comes with big account. If you have, for example, if you want to do day trading, you know that day trading, the broker will not let you do to use your money, the whole money, 3 day trades in the week. For example, you buy and you sell today, they give you a warning that they say to you, you are doing day trading. You shouldn't. Why? Because there is a rule, regulations from the Security Exchange Commission. You should have more $25,000 to do day trading. Now your account is 2,000, 1,000, 10,000. Okay? So it is not enough. You can do 3 trades per week. That's it. You can do more if you are good at day trading. Okay? If you do the 4th one or the 5th one, they block your account. They flag your account. And they say that you are a day trader and you shouldn't be day trader, because it's not because you don't know how to trade, you are professional. It has nothing to do with that. It's just because of regulation. You should have $25,000. If you don't have that money, they will not let you do a lot of trades. Okay? If you do 2 or 3 trades a day, believe me, they will flag your account and they will stop you from trading. That's why, if you want to do day trading, you should have a bigger account, like $25,000 and more. Okay? So we spoke about risky trades, like when you go to penny stocks and you begin to trade like that. You will lose a lot of money. Believe me. Second big mistake is not to put stop loss. Not to know your risk. This is a very large problem. You enter to a stock and you don't know what is your risk. Is it worth it to do the stock, to do the trade or not? For example, you put let's say you buy $10 a share, a stock, and you put $5 as stop loss. Okay? So this is 50% of your money. And suppose you let it for 1 month or 2. Suppose that the stock from 10 goes to 5 and it hits your stop loss. So you will lose 50%. And 50% is too much. Like a loss. You lose half of your capital. How can you work? How can you trade more? And your goal in the first year is to stay trading. It doesn't mean that you should trade each day or each week or each month. No. You can trade whenever you like. You can trade once a week, once a month, once in 2 weeks. You don't have a rush. Don't rush trading. Think wisely, search wisely, and do what is right. Okay? It doesn't mean that when you do a lot of trades that you make more money. When you do a lot of trades and you don't know how to trade, you pay too much commissions and you lose a lot and you end up losing all your account. Okay? So we say don't do risky things, put stop loss, and manage well your account. You shouldn't put all your account in one trade. This is very, very dangerous. This is called like position management, or you should manage well your account in terms of trades. If you do 2 trades or 3 trades, in terms of risk and reward, is better than to do 1 trade at once. Because when you do 1 trade at once and you lose that much, your account will be lower and lower, and by the end of the year you will lose all your account. Now, this is what you should do in the first year. It means all this recommendation that I say, stay conservative. Don't rush and do risky trades. How do you know risky trades? By looking at the trade. You say, if I buy at 10, if the stock is against me, it means if the market is against me, at what price should I get out? What loss should I have? For example, 10, the stock is, for example, $10. If you put $9 as a stop loss, you will lose 10% of your money. Okay? Understand that? 10% of your money. You buy, for example, $10, $1,000, you buy 100 shares, and suppose that that few days from 10 it goes to 9, and your stop loss is 9, so, and you exit the trade, so you lose $100. $100, you see, it's not that much, but it is 10% of your money. If you have, for example, $1,000, it's 10%, and 10% is too much, because if you lose 10% in each trade, 2 or 3 trades, 4 trades, 5 trades, you lose half of your money or more, and then you can use the trade. Okay? So understand that losing many times could lead to losing your. That's why, if you have a bigger account, you will be at ease. Okay? When you lose 2% or 1, because if you lose 1%, 2%, 3%, this is good. You don't lose that much, and your account is good in order to make other trades and you make profits. But if you lose 10%, 20%, 30% in each trade, how much money is left for you? Nothing. Okay? So don't think too much about the money. Okay? At first, you should think to preserve your money from losing that much. There are many ways that you can do. Don't do risky trades. You don't lose that much money. Put stop loss whenever the stock is against you, the market is against you. You exit, so you don't lose that much money. If the trade is good, stay. Don't exit a trade that it is running and the profit each day you have more profit. Why you exit? If you want to exit very quickly, you can put stop loss near the closing price, and if the stock is against you or the market is against you next morning, you exit. Okay, but you have a profit, a good profit. But don't do like some people do. I see them online. They do what we call price target. Price target is when you are doing day trading, or you're doing forex, or you're doing. You should need, because those they have a formula, they have strategy that they follow, and they are very disciplined. Okay, they know what they want to lose, and they know how much they make in each trade, and this is their work, and they are professional. Don't follow those kind of professional, because you can't do that like them. You can't do like them because they are doing day trade and they have too much money as a capital. Someone who has millions of dollars, you cannot follow him. You cannot follow what he is doing because he has too much money. He can buy whatever he wants, any stock that he wants, whatever. But you have 1,000, 2,000, 5,000, and you are doing price target and some stuff that maybe you don't understand. Okay? The stock is going up, let it go up and you make more profit. Don't exit. But you should follow it with a stop loss. Each time the price go up, take your stop loss up too. For example, it goes $1, raise your stop loss $1. $2, raise. Okay? and follow the stock, because it is a job, it is a work that you should do. It's not just you buy a stock and you leave it for 1 month or 2, and then you open your account and you see if you lose or you lose or you win. This is gambling. This is not trading. If you are doing something, if you are doing like investing, it's okay, because investing, you learn a lot about the company. You learn about fundamentals. You learn about earnings. You see a lot of stuff in the company. This is okay, because investing is not the same as trading. Okay, trading, depending on which kind of trading, is it day trading, swing trading, position trading, you should look each day what you are doing. Is the stock is going up, or you exit the trade, or because suppose that you buy a stock, even if you put stop loss. For example, you buy the stock $10 and you put stop at $9. Now you close your account and you come after 1 month later, okay? You find that the stock is $20. But when you find that you exit at 9 because the stock has gone down at 9 or 8 or 7, and then it goes up again. And you said, oh, I do a mistake, I shouldn't do stop loss. No, you have not done a mistake. If you are doing business, you should at least check daily and see what the stock is going. For example, if the stock going to 9 and you exit, it go to 8 and 7, and then from 7 it goes again to 10, 11, 12, you buy it again. What's the problem? You buy it again since you see that the stock is right, is going good and is going up. But before, when you buy it in the wrong moment. Okay? It is your mistake, it's not the market mistake. It is your mistake. Now, if you take a small loss and you buy it again, you will make money later from this stock or from another one. But don't just buy something and leave it. This is ridiculous. You are doing a business. As I told you about the example before, you cannot run a business without having a manager. You cannot open a shop like this, you sell things, and you have no manager, no cashier, nothing. Just you leave it like this. Anyone can enter, can take your products and go out, stealing or looting your shop, and you say, okay, it's good. This business is good. Let them take the money. I will make money later. How do you make money? Since you are losing money. Okay. This is, in general, my opinion or my insights on what to do in the first year. Don't rush to make a profit. The money will come to you. It will come to you when you are serious. Don't rush. You need to learn, and you need time, and you need skills. It is a process. You develop yourself. You control your feelings. No emotions. No love for a stock. Stock is not a human being to love. It's just a way to make money. It's a means to make money. Like when you do car dealers, or when you have a shop and you sell stuff, it's a business. You buy cheap and you sell high, and you make money. And it's something that maybe you can do daily if you are a day trader. You can do it like swing trading. You can trade once or twice or 3 times a week, or you can do a position trading. You don't trade that much, once in a month, 2 or 3 months, or you can invest and you stay with a stock 1 year, 2 years, 3 years, or 10 years if the stock is going good. Okay, so don't rush and don't judge yourself. For example, you lose too much money and you say, no, this is not my vocation. I will be a loser, and trading is not for me. No, it is not. It is just you need time to learn. Anyone can learn trading. There is no a type of intelligence. You say go and get a PhD in math and come to trading and you win. No, PhD in math and he loses money. because he doesn't learn trading. Trading is something different from anything else. It is an art of trading. Okay, it isn't in a purely like scientific thing. Because why it is not scientific thing? Because it relies on humans. Humans, they fear and they get greed. It's emotions. What you see in the market is emotions. When you see a stock that it is going up, oh, you say, I can make money, so I buy it. So you buy it by emotions, and it's greed. You want more and more and more and more. And when you lose in a trade, you stay in the trade and you hold it. Your feelings hold on the stock, thinking that the stock will go up again. And you trade by hope and luck. And that's why you lose a lot of money. And you can make a lot of money. But in order to make money in the market, you need time, you need to learn, you need a strategy, and you need rules in the trading. Rules. Okay? As if you are going to work. For example, you work from 8 to, let's say, 8 to 3 or 4 o'clock, a daily job. Okay? You cannot go at 9 or 10 or 11. Okay? This is the job. You should respect and you should have rules in your life. Okay? You should do some stuff in order to make money. In a job, or in trading, or anything else. So this is enough for what to do in the first year. Now, if you have other comments or you have questions about what I say, please just comment or send me a private message if it is something private. Thank you very much and have a nice day.